it's time to welcome our first guest, Peter Morici, professor of international business at the University of Maryland and one of the country's leading experts on economic policy and international economics. He's lectured at more than 100 institutions, including Columbia University, the Harvard Business School, and Oxford University. And of course, we're always proud and happy to have him back with us here on The Income Generation. Peter, welcome back to the show.
Nice to be with you.
So, okay, help me out with this here. All of a sudden on the news over the last week or so, we're hearing about the markets are nervous because of a recession, possible pullback in the economy, but yet when we were growing at 2%, we didn't hear about that. And now that we saw 4% GDP growth and 3.5% GDP growth in 2 consecutive quarters, now everybody's worried about a recession. What's going on? Why is that?
Well, a couple of things you need to remember is the Democrats put out a lot of good disinformation during the campaign and even last summer that this is a sugar high, that it can't be sustained, that that's just a brief spurt of demand from consumers having more money in their paycheck. There seems to be complete denial that it'll do anything for business spending, when indeed it has. So that's a problem. The second thing is the stock market isn't overvalued on average. But it's the old story of 1 foot in fire and 1 foot in ice, and on average, I feel fine.
That's right.
I mean, the FANG stocks and a few other techs have done really, really well until the last month. But we're starting to hit a realization that several of these stocks have got real problems. Apple has no one left to sell these to. It's got every one of these in the hands of everybody who can afford to spend $1,000 that doesn't, prefer Droid's operating system overall. And so, it's now resorting to raising the price of a $600 phone, $150 at starter phone. It's absurd. Mm-hmm. Netflix, you have to see how they book their production costs. It kind of reminds me of the Krispy Kreme scandal several years ago, where they were booking franchise fees in one-time franchise fees in this year's revenue, not recognizing that it would go away next year, that it was a one-time thing. Instead, over there, they're not really booking their production costs. They're saying these shows are going to have residual value. That might have worked for CBS when they sold them for reruns, but who's Netscape going to sell their reruns to? Last I heard that was Netscape.
Right.
And so if you go down the list, you start to see problems here and there. With Amazon and Google, it's the problem of antitrust. And also, Amazon doesn't make a lot of money selling stuff. They make a lot of money with their cloud services and so forth. Mm-hmm. That is not an infinite market. So my feeling is that a lot of these techs are not the growth stocks that they have been presented us to be. And the market is looking for new sources of leadership. Well, it's certainly not going to come from IBM, Sears, and General Electric. And so without those sources of leadership, and they're out there, but we haven't identified them yet, it makes the markets skittish. So you have all those kinds of things mixing around. And then, of course, you got the Chinese slow growth. And everybody, even people who grow tomatoes, are blaming the steel tariff for their troubles. Well, it's absurd.
So it sounds like to some extent the problem is we're getting defanged. And since some of the FANG stocks have led the market on the upswing, it's no surprise that what you're describing now is causing a pullback. But does that mean in your mind that, and I know you're not a stock picker per se, you're an economist, but in the minute or so we have left in this segment, tell us, does that mean in your opinion that you think finally maybe value will come back? Growth has been beating value in the stock market for 8 years. So maybe are we going to get back to basics a little bit now when it comes to stock picking? Is that your best guess?
Well, value, yes, but the question is who has value? We've written the internet out to its logical extremes, and the next 20 years is going to be defined by artificial intelligence. But who are the big artificial intelligence companies? Who are the companies that can monetize artificial intelligence? We know that IBM is big on artificial intelligence, but they don't know how to monetize it. The question is, who is going to monetize artificial intelligence? Is it going to be somebody like Waymo, which belongs to Google, or is it going to be someone else? We don't know. It's where we were with automobiles at the turn of the in the early 20th century, when we had 8 or 10 manufacturers and no one had yet emerged.
So it sounds like what you're saying is you think the answer is yes, except that
Yes, it is.
value's
But
likely
who's
to
got
get
value?
redefined, is what you're saying. So we need to leave it there for this segment. We need to take a commercial break, Peter. Stay with us. And you stay with us, too. We'll be right back here with more from Dave Scranton and Peter Morici on the income generation. We'll be right back.